Hello, good day. Welcome to my channel. As always, my name is Peter from Profitable Pips. On this channel, I've made a commitment to you to be teaching you consistently different strategies that you can use to trade the forex market and be making profits consistently. All right, in my last video, I taught you a strategy, breakout strategy, that if you follow this strategy, if you follow the rules, you can be making, say, more than 15%, 10 to 15% profit on your investment monthly. All right. So I'm here as a forex coach. I want to please plead with you to subscribe to this channel and also like this video so that subsequently when more of this video is being uploaded, you'll be one of the first to get it. All right. So once again, I welcome you all. Now, like I said, on this channel, I'm going to be teaching you different strategies that you can use to make profit consistently trading the forex market. You will never do well trading forex if you do not have a strategy. It is very, very important you have a strategy. A strategy gives you an edge, it gives you an advantage in the forex market. If you do not have a strategy, what you're doing is gambling with your hard earned money. So it is very, very important for you as a forex trader to have a strategy that works. Of course, having a good strategy is not the only thing you need to be consistently making profit. You need to also manage your risk. You need to also manage your emotions. There are ingredients that when you put these ingredients together, harness them appropriately, then you are on your way to consistently making profit in forex market. All right. So, but now I'm going to be showing you one of the strategies that have worked for me. In my last video, I taught you how to trade breakout strategy. This the strategy that I taught you last time. There are so many videos out there on how to trade breakout, but I want to believe that what I taught you may be of help to you if you follow the rules. I am sure that if you follow the rules of trading breakout, you are going to be making profit consistently. All right. But on this channel, I'm not going to, sorry, on this video today, I am not going to be talking about breakout strategy. I'm going to be teaching you another strategy. And this strategy is called support and resistance reversal candlestick pattern. You see, the strategy that you are using should have a name. It is very important for you to give it a name so that if the strategy is doing well or is not doing well, you know you have a name for it. Okay, I used this particular strategy, it did not work. I used that particular strategy, it worked for me. You give it a name. All right. So, like I said, the strategy I'm going to be teaching you today is called support and resistance reversal candlestick pattern. All right. Now, it is very, very clear that history most of the time repeats itself. It almost always repeats itself. What had happened previously, right, can be happening now as well and will also happen in the future. If you can go back few days or few months or few years ago, depending on the kind of trader that you are, to backtest a strategy that you have created for yourself, and you see how it worked in the past. You see how profitable it had been in the past. If you incorporate this strategy to your present trading uh, component, you will see that it is going to work if you follow the rules, and it's also going to be profitable for you in the future. All right, like I said, that there are components that when you put these components or ingredients together and you harness them appropriately, you are going to be a consistent, profitable forex trader. Right now, having said that, What is the strategy that I'm talking about? What is the strategy? Strategy, like I said that this strategy is called support and resistance reversal candlestick pattern. Support and resistance reversal candlestick pattern. All right. Now, in case you do not know what support is and what resistance is, resistance and support, or support is an area or zone where buyers actually are waiting to buy. They are waiting at a level, at a price to buy into the market, right? Like on this chart, this area are the support area because at this price, buyers are willing to buy. They are comfortable with this price to enter the market, to buy into the market. And that is why you can see that for 2 days or so, price had been reversing. That's been reversing from this price. All right. Now, let me draw my horizontal line to show you what I'm talking about. Now, pick my horizontal line and place it where it reversed previously. Okay. There are different ways to place a horizontal line. You can either place it on the wick, because some people place it on the wick, while some place it on the body. So it depends on you, the kind of trader that you are. But as for me, I like placing it on the body and on the wick. All right. So this whole area is my support area. All right. And of course, I'm not just looking at this wick and the body. I'm not looking at the wick and the body. I'm not just looking at this. I'm looking at this whole area, like say here, this whole area. All right. I'm looking at this whole area because sometimes the price would not get to this level before it will reverse. All right. So we are not looking at a particular line as the support, but we are looking at the whole area. Sometimes it could break through this price, then come back again to the opposite direction. Sometimes it would almost get to this price, and then like what you can see here, it almost got to this price and then reversed. All right. So when we're talking about support, we are not just talking about the line, but the whole area or the whole of this zone. All right. Okay. Let's see. All right, so this whole area is my support. Now, also, what is resistance? Resistance is an area or zone where sellers are waiting to sell into the market, where sellers are waiting. So I'll place my horizontal line where price had reversed from previously. All right, so I'm going to place it here. The closest one is here. All right, I'm going to place it here, and I'm also going to place it at this price. Okay, so this whole area is my resistance area. All right, sellers are waiting here at this price to sell, while buyers are waiting at this support to buy. Sellers are waiting at this resistance to sell. All right, while buyers are waiting at the support to buy. All right, now just know that support is an area or zone where buyers are waiting to buy into the market, while resistance is at the top, like a ceiling, where sellers are waiting to sell into the market. Now, how do you know a strong support and a strong resistance? Because it is very, very important for you as a trader to look for a strong support to buy into the market and a strong resistance to sell into the market. All right. So how do you know a strong support and a strong resistance? Now, when a price reverses from a particular zone one or two times, the third time there's every probability, about 70 to 80% probability, that it's going to reverse. Right now, when price reverses from a particular price 2 or 3 times, it makes the zone of the area a strong zone or area, makes the support, like what we can see here, the strong support, it makes the support a strong support. Now, when price reverses from this price, when it reverses from this price the first time, you might want to wait for it to come to this same price and reverse second and third time before you can be sure that it's going to reverse, right? However, it is not in all situations. Sometimes it might, you know, come back and bounce more than 3 times, more than 4 times. All right. But the more times price reverses from this particular area, the lesser the the guarantee that it's going to reverse. All right. When you see more touches, let's say three, four, or the fifth time, there's no guarantee that it's going to reverse from this particular price. When the fifth touch, it may break out of this zone. I said may. I'm not saying that it's going to break out. It may break out of the zone, out of this ranging zone, right? So, but when you see a first and second reversal, the third reversal, you see that it is a strong reversal. So the fourth one you can buy into the market, or even after the first and the second, you can buy into the market. But what I can see here, I think this is the first one. This is the second one here. Though this one did not get to the it did not get to this zone, this line. Yeah, but like I said this whole area is the support area. All right. So I think this is the first, second, third, fourth. All right. Now, when price gets here, this is the first reversal from the price, second, and the third time. Now, when it got to this price area, what can you see here? You can see a pin bar. You see, there is a pin bar here. Let me delete this line, this horizontal line. Okay. Now, this is a pin bar. Shift this horizontal line away from here. Now, you can see this pin bar here. Look at the pin bar here. This pin bar here is a reversal candlestick pattern. Now, when you see a reversal candlestick pattern on a support or resistance, it means that the price here, the buyers at this point is, the sellers, I mean, at this point is weak, because it is sellers that were moving the price down to this level. The sellers were in control here. They pushed the price down, went up a little bit. The sellers pushed the price down to this buyer zone. You see, we have a lot of red candles here signifying sellers. So the sellers are more on this area. That's why the pressure was much. The sellers are pushing the price here, but the buyers here, they are more than the sellers. That was why you could see this pin bar. This pin bar, you see this long tail, see this small body, right? It means that it's the buyers that push the price up and makes the body to be this small. And this signifies weakness of the sellers. Weakness of the sellers. At this point, the sellers are weak, but the buyers here are strong. So because of the strength of the buyers, the price reversed and went to the opposite direction. All right. Remember, I said this strategy is support and resistance reversal candlestick pattern. See, on this support, you can see this reversal candlestick pattern. And this reversal candlestick pattern is giving us a signal that the price is going to reverse at this point and go to the opposite direction. And you can see after this pin bar, the next candle is a bullish engulfing candlestick pattern. Now, this bullish engulfing candlestick pattern engulfs the previous pin bar. So this bullish engulfing signifies strength of the buyers. Buyers are strong here, and so you see the price going up. All right. So this is the strategy: support and resistance reversal candlestick pattern. All right. Now, Because this is a support, we are going to call it support reversal candlestick pattern. Support reversal candlestick pattern. Now, immediately after this pin bar, maybe few cents after this pin bar, you can place a trade, and then you control your risks by, say, you risk 1% of your capital, 1% of your capital, right? That is, you should be losing, say, 10 pips, 10 pips. You'll be willing to lose 10 pips to make, say, 15 pips or 20 pips, as the case may be, all right? Never lose more or never risk more than 1% of your capital, right? So 10 pips could be 1% of your capital. So your risk to reward ratio is 1 to 1.5 or 1 to 2, right? But I'm not going to be talking more about risk management. Maybe in my subsequent video, I'm going to be talking about risk management, all right? So we can see a reversal candlestick pattern on the support zone. All right. Now let's look at the resistance. Now this is the resistance area, meaning sellers are waiting at this area to sell. All right. So what you should be waiting for is a reversal candlestick pattern on this um, sellers area, or this resistance or seller zone. Right? When price gets to this seller zone and you see a reversal candlestick pattern, it is a signal to sell into the market. And now let's see. Now, when the buyers push the price to this seller's area, the buyers here were strong. They push the price up to this seller zone. But on getting to the seller zone, the buyers became weak. They are weak by the appearance of this candlestick. See, this candlestick is small, and the next one is bearish engulfing candlestick pattern. Bearish engulfing candlestick pattern. And this is also a reversal candlestick pattern. Remember the strategy: bullish and bearish reversal candlestick pattern. This one we saw here previously was um, support reversal candlestick pattern, while this one is resistance reversal candlestick pattern. All right, this bearish engulfing candlestick pattern means that the sellers here, they are pushing the price down to the opposite direction. The sellers are stronger here than the buyers. So this bearish engulfing engulfs the previous candlesticks, or is bigger, stronger than the previous candlestick pattern. Right? Okay. So can you see it? Look at it here. No, look at it here. See, it's bigger, stronger than the previous. You can see it here. While for the support, you can see here, look at the pin bar, and the next candlestick that appear is what? Bullish engulfing. This is bullish engulfing. After the pin bar, there's a bullish engulfing candlesticks, which means that the price is reversing. It's going to the opposite direction. On the resistance, you can see this small candlestick pattern. The next candlestick is what? Bearish engulfing candlestick pattern, signifying strength of the sellers. The sellers are pushing the price to the opposite direction. All right. Now, when the price is going sideways, you can use this strategy to make profit for yourself. If you are patient, patience is very, very important in forex trading. Right? You don't force a trade. You don't go on chasing trades. You need to wait for the trade to come to you. You have your strategy in place. You wait for the market to give you what you are looking for. And when the market gives you what you are looking for, you go ahead and place your trade and control your risk appropriately. All right? So always don't forget that patience is very, very key. You need a good strategy, and you need to be patient for the market to give you what you are looking for. You need to wait for the market to be at par with your strategy. right? If you are in a rush to place a trade, you are going to be losing money. In forex trading, professionals and big institutions, they are not in a rush to place a trade. They wait for the market to come to them, and that is why the big players in the market, they are making profit consistently. Not that they don't lose, they also lose, but they win more than they lose. They make more profit more than they lose. All right. Okay, so this is a strategy. Let's see whether we can see another one. All right, it came back here, strong sellers candlestick and reverse, but we cannot see a reversal candlestick pattern here. All right, now it went back up, and you can see what's happening here. All right, it's been trying to break out of this zone, this seller zone. It broke, this candlestick broke and closed above it, but the buyers, I think, are not stronger than the sellers at this point, and that was why the sellers still push the price back into this range, right? But when we look here, the buyers push the price to this same buyer's zone or buyer's area. You can see the formation of this candlestick. This is a reversal candlestick pattern. All right, the previous one is red, is seller's candlestick pattern. The next one is buyer's candlestick. So it signifies also reversal. So you can also place your trade here and manage your risk appropriately. Right? So you can be using this strategy as your strategy. You can personalize it and wait for the market to range. When the market is ranging, it's on a sideways market, you wait for the market to give you what you're looking for. A reversal candlestick pattern on the support, a reversal candlestick pattern on the resistance. When you see these patterns, you can place your trade and control your risk appropriately. Always remember never to risk more than 1% of your capital. All right, so this is a strategy. All right, if if you have any question, you can drop it in the comment. If you want more clarity, you can drop it in the comment below, and I will do well to respond to your comment. All right. Thank you for listening. Once again, please, if you have not subscribed to this channel, subscribe to my channel and like it so that subsequently, when more of my profitable videos have been uploaded, you'll be one of the first to get it. Once again, my name is Peter from Profitable Pips. I'm here to teach you different strategy that you can use to be making profit in the forex market consistently. Thank you for listening. I'm looking forward to hearing from you. May the market be with you. Bye bye.